Why do people want to trade the Forex market? Stay tuned, we'll be right back. Hi, I'm Stacey Burke from Stacey Burke Trading, and today we're just going to do a short review of why people want to trade the Forex market and what's so attractive about it. So Forex, as we've talked about in the other videos, is a short term for foreign exchange. And foreign exchange is the market where currencies of one country are paired against another, and people can either purchase them or sell them. And a really easy example of that is that if you order something online from eBay or some other online purchase, and the item is coming from a foreign country, there has to be an exchange of currencies in order for that exchange of goods to take place. So for example, I order a camera online, I buy it in Australian dollars, that's converted when I purchase the funds into British pounds, and then the bank, who is the mediation party to those two parties having that exchange, will convert the currency and then pay the seller. Now, another example of that is that if you were going to go on vacation, and for example, if we were going to go to Canada, well, we would want to exchange Australian dollars for Canadian dollars. Now, the foreign exchange market is made up of thousands of banks worldwide that act as there is no central clearinghouse. So it's almost like a virtual world of where all these exchanges of currencies take place. The market is open 24 hours, 5 days a week, and there's approximately $3 to $4 trillion going through the market every 24 hours. Now, to put that in perspective, that's more than all the global stock markets combined. So it's an absolutely massive liquid market. Now, the major currency pairs that are exchanged on a regular daily basis against the US dollar are the sterling or the British pound, the euro, the Japanese yen, the Aussie dollar, the New Zealand dollar, the Swiss franc, and the Canadian dollar. Now, those are 7 of the more mainly traded pairs. There's lots of other currency pairs that are traded, but those are the main major pairs. And out of those, the pound, the euro, the yen are probably the 3 largest. Now, who are the participants in this market? Well, there's mainly 4 large participants. Central banks, who tend to act around their economic policy or their monetary policy of a particular country, so they're not necessarily there to profit by it, but they're there to stabilize their central bank policy. And a good example of that is the Japanese government, who will often intervene into the Japanese yen at certain occasion if the yen gains too much strength against the US dollar. And part of that is because Japan, a lot of Japan's economy is based on exporting of their goods, so the higher Japanese yen their items become more expensive, so it slows down some of their economic activity in the country. So the Japanese central bank intervenes to keep it at a certain level, which makes it attractive for the production of their goods. Second group is fund managers. Now, fund managers will often try to possibly time the purchases of certain assets and sell them for profit, and they may not necessarily be short-term participants, they may be long-term participants. The 2 types of trading timeframes can vary from several times a day to only maybe 2 or 3 times a year for some of these participants. The next group are corporate treasurers. So these are corporate treasury departments who are acting in line with internal budgets for their company. They may deal with international exchange rates, so they have to sort of lock in possibly an average exchange rate over the year to budget for certain items, because they deal in foreign currency in other countries with either purchasing of goods or sales of services. So the last group is speculators. Now, speculators are largely made up of individuals such as myself or many other private small traders who look to profit by possibly positioning themselves in larger trends that are driven by the three larger players in the market. There's lots of opportunities and trading ideas. As I said, some people will trade several times a day, whereas other people may just position trade or exchange 2 to 3 times a year to try and profit from some of those larger movements that occur in the currency market. Now, the markets are very large and liquid. As I said, there's approximately $3 to $4 trillion a day that go through the markets. It's a very technical market. There's lots of volatility and movement. There's 3 main time frames when large volumes come into the market. Typically, the market will open in Asia as the sun rises in the Asian economy, and it's not as liquid. It's probably the smallest of the 3 main time frames, but as London kicks off, which is around 2 o'clock in the morning New York Standard Time, as London opens up, that's the largest time frame for currency trading globally. That is where the largest market of volume and liquidity occurs, and usually between 2 and 5 a.m. that's where we'll see abrupt movements in the pairs start to take off and move in the markets. Now, as that time transitions into the New York Open, the second largest market takes over, which is America, and again we'll see fairly high volume, high liquidity, and lots of movement through the markets up until the end of where London closes and Europe closes, and New York's sort of getting towards the later part of their session, which is around 11 o'clock or midnight New York time. So as that U.S. session sort of winds down towards 4 or 5 o'clock in the afternoon New York time, the Asian market again will prepare itself to start up within a few hours, but the currency pairs are constantly trading Monday to Friday, but those are the 3 main time frames for where a large volume start to come into the market and we start to see these pairs move. So hopefully that gives you an idea of the basics. We'll talk about trading those markets in our next video, but for today that just gives you sort of a round conceptual view of why the markets are there, how they can move so much and why there's so much volume going through that, and how we as small traders or speculators can participate in that market. So hopefully you got some value out of today's video, traders. Stay disciplined, work on your trading plan, stay focused, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.